what are the stocks we're talking about? Let's pull up ITC. Reports had claimed that you could see as much as a 35% tax now on tobacco, and you saw ITC having a bit of a down day. Will you see a recovery there? I wonder if you'd see Varun Beverages, for example, because aerated drinks was also in that. Let's pull up a Star Health. Let's pull up, some insurance players as well, like a Niva Bupa. I'm marking out Niva Bupa 10% up yesterday. Part of the whole GST story is that you would have complete cancellation of 18% GST on certain categories of health insurance, and these two stocks had noticeably run up. They've both come out and given clarification saying that there's no official point on this. Will you see a pullback over there? That's one to look out for. Nomura, meanwhile, has initiated coverage on Oberoi Realty. So we're looking at Oberoi Realty as another stock today. That's a thumbs up as well. They've initiated coverage with a buy and a target price of 2,500 rupees. So that's a positive. They're saying pre-sales should record a 40% growth in FY24 to FY27. They're poised for aggressive business development and have relatively low net debt to equity of 0.02 times. 8,500 crore rupees is also ready inventory to be sold over the next 2 to 3 years. So a thumbs up definitely there for Oberoi Realty. They plan to pursue growth by raising funds of up to 6,000 crore rupees. Swiggy, I don't know. This is a bit of a mix. I know numbers came in just at the fag end of markets yesterday, so a bit of a thumbs down there. I would say most consensus estimates have been beaten, but the fact that their GOV, which is gross order volume, has slowed down is half of what Zomato's is. Significantly lower than Zomato's, and is showing a loss of market share, might be a downer. Quick commerce has driven a 30% year-on-year growth. They're expecting a break even in operating income by December 2025, but gross order value is lower than Zomato for the first half, which indicates a market share loss. The numbers in itself, revenue is up 12%, but the EBITDA loss is widened to 555 crores. Net loss is widened to 626 crores. We'll have a more detailed piece from my colleague Mahima on the Swiggy numbers, and of course, Neeraj's conversation with the Swiggy team. But I'm not sure. You had a massive run up a couple of days. I think you might have a bit of a down day today.
Yeah, let's wait and watch. The brokerage notes also that have come out are kind of neither here nor there types on Swiggy, so could be interesting. Do watch out for that. Okay, not too many newsmakers. IEX is the first one, and neither a thumbs up nor a thumbs down from my end on this one, but certainly something to watch out for because there are pulls and pressures out here. So if you look at the November electricity traded volume was up about 16% YOY. Real-time market volume was about 28% YOY, but the pricing has come off, and therefore it becomes difficult to call this one. Under normal circumstances, about a 16 and a 26% traded volume and real-time market volume growth should spur optimism. So maybe the stock reacts positively. Do watch out for IEX in the session today. Reliance Power, and again, fundamentally zero view on this one, just so difficult a business to analyze. But the news flow is positive today, may react and therefore bring it out. SECI's withdrawn the order banning the company from participating in tenders effective immediately, and therefore the company and its arms, except one arm, are eligible to participate in all SECI tenders. Doesn't mean they'll win, but maybe a shot in the arm. So do watch out for Reliance Power, may have a bit of a positive. So keep an eye out for this one. And RVNL, it's a small order win, 186 crores, not too much from East Central Railway, but who knows, may react a bit positively. So do watch out for this one as well. The first three on my radar for the morning. And then, Tamanna, there are a few others. The one that I definitely want to point out is Granules India. Now, viewers, remember, for people who missed the action yesterday, keep Granules in mind. It's entered the F&O ban, and that's why it's important. Yesterday, in the last half an hour, the news flow came out that there is an official action initiated, or OAI status, on its Gagillapur facility. Now, this is the strictest form of regulation from the US FDA, as a result of which Granules cracked. And how? 10% in a matter of 15 minutes. And it stayed there. It didn't make any attempt at a recovery because, yes, this is bad news. There's a lot of optimism that Granules will go through this and get over it in December. The opposite has happened. Now, the point is, though, that today it's entered the FNO band because the market-wide positions crossed the 95%, obviously so, because of the heightened trading activity yesterday. So may not have as much of a strong reaction, and which is why you got to keep in mind, not possible to go long or short or it on the derivative side, except for the cash markets wherein you can play around with granules. So just wanted to point it out that it's a very active stock, was amongst the highest traded counters yesterday in the FNO band today. So keep an eye out.
I'll just add one interesting note I've spotted before we go to the deep dive on Swiggy. Jeffries on Supreme Industry has retained a buy with a target price of 6,450 rupees. That's an upside of 35%. So that's one to watch. They say that the management, that's after the management meeting. So they expect healthy volume growth of 20% in the second half of 25. That's a management stake versus a 9% in H1. I mean, that number caught my eye. So you're expecting to go from 9% to 20% on both halves of the year. Volume growth will be aided by channel stocking, seasonality, so that's understood, new capex. Pipe capacity is expected to grow by 13%, aiding market share. And they view the company as a good play on plumbing, agri, and infra play. You know, as spends also will increase in the second half, this could be an interesting to watch out for. So Supreme Industry is also one which would be a thumbs up because of the Jeffrey stake.